Hi everyone, I'm Jasper Basson. I'm the director of Dryk Holdings. Today we're focusing on our I've done a lot of advertising regarding this first tax webinar. We're going to do a whole series of free tax webinars, merely just to obviously show appreciation to everybody, all the followers, all our clients. And today we are aiming, and everything is based on the SARS filing season that started on Monday. So I'll guide you guys through some of the aspects to look for when you do your tax returns, and what expenses you can claim, when you need to file a tax return, all kinds of various aspects, but mainly obviously focusing on what allowances, what tax allowances and tax deductions you can actually make on your tax return. Going into this year, SARS were very strict on all the various expenses that you actually claim, in the sense of supporting documents. We actually from the beginning of this year, I requested my staff to, before we do any tax returns and submit any tax returns, we make sure that we have all the various supporting documents that we can, in the case of an audit, that we can submit as soon as possible, preferably within the same day that we do file the tax return. The reason for that mainly is you have a very small turnaround time. If you need to look for documentation, and we can go through all the documentation as we go along in this webinar today. But if you don't have the documentation and you need to start looking for it from the client, and you can't submit the tax return or the supporting documents for the audit very quickly, then you can potentially, the expenses can be written back by the auditors, and you need to obviously from there fight again with a notice of objection to get the expenses reinstated on your tax assessment. Right, so that's just more or less the basics, and it's regarding the supporting docs is very important. And just to give you a rough idea, if you're a salary earner and you do earn a salary of less than 350,000 rand per annum from one employer, then you don't have to submit a tax return. If you have a 350,000 rand salary from one employer, but you have allowances, or you have capital gains tax or loss, or rental income, then obviously from there you would need to submit the tax return still, even though you only are based with one employer. Right, so I'm going to do a few aspects of only personal tax today. It's only based on the personal tax filing season that started on Monday. So I'm not going into any technicalities regarding businesses or structures or anything. It's merely about what you can claim, what you need to keep for your claim, for your expenses, etc. Right, so if you're a salary earner, you basically have a few expenses that you can claim. The first one would be your medical aid. So medical aid is calculated on two different formulas. I'm not going to go into the calculations right now, but you work according to your medical aid certificate, according to your various beneficiaries, or with you on the dependents on the medical aid, and you get a medical tax credit for each and every person that's on with you on the medical aid. The main member who's paying the medical aid, and who is actually the main member on with the medical aid as well, in that person's income tax return you can claim the medical tax credits. Any other expenses more than your medical aid premiums or payments on a monthly basis, you can, according to a formula, you can claim that expenses. Very important, keep your invoices that you've paid to any other pharmacy or hospital bills. Keep your bills to have proof as a supporting doc when you submit your income tax return. Okay, the next one would be your retirement annuity. So retirement annuity, or in short, is a RA. Again, I'm not going to do the calculation, but there is a certain amount, a certain percentage on your annual income that you can deduct from your total payments that you've done to your retirement annuity. You will get a certificate from your specific policy holder, and you can claim according to that. Right, and then the last thing that's probably the most important expense that not everybody will have, but it's your travel allowance. So travel allowance is a bit more tricky, and that's where SARS, especially for this part of the tax return, for just a salary earner with these three various expenses, are focusing primarily on this travel allowance. Before you submit your tax return, please make sure you have your purchase contract. That's normally, if you have a hire purchase, you have a hire purchase agreement with the bank, with the total amount, obviously showing the total cost price, showing on that hire purchase agreement. Keep that ready. If it's a cash vehicle that you bought cash, have the proof of payment and the invoice ready before you submit your income tax return. Then obviously to do claim for against the travel allowance that you received from your employer, you need to have a logbook, and the logbook is very important to understand what you need to keep to actually claim business expenses. You get various electronic devices that you can use for logbooks that I would suggest. Most people struggle to keep each and every trip, keep record of that. The manual way would be to keep a track of each and every kilometer that you drive, so or every single trip that you drive. So from your accountant to the bank would be one trip in a day, from the bank to a client would be another trip, and you need to log each and every single business trip to have proof to SARS for your logbook. So a logbook that a lot of people have in their mind is throwing in some petrol, putting your kilometers, and when you refill again, you put against your kilometers. That's maybe a logbook for yourself, but it's definitely not a logbook for SARS. You need to keep each and every business trip that you do. You need to keep a log of that, obviously with your kilometers. Put on that logbook. So yeah, you can either use the manual one. You can print it from SARS site, you can print it from our website, dryk.com, or you can look at getting an electronic device, which there's a little logbook, there is trip track, all kinds of devices that you can use. I would suggest get you one. I'm using one, and that's probably the only way you would probably keep a proper logbook in today's busy life. Okay, so that mostly cover purely salary earner, the tax return for them. Again, I can't say it enough. If you have any of these deductions before you submit your tax return, please make sure that you have your documentation ready, as if SARS would audit you, because the chance, especially with the refund, is almost 50%, even if it's not even more, that SARS will actually audit you, or they call it a review, that you need to upload the documentation. Make sure that you're ready, that you can on the same day even submit your supporting documents and upload it to SARS. Okay, so that more or less covered the salary. There's obviously a lot extra that I can explain to you regarding salaries and structures and everything, but that's not the idea of today. The idea of today is just purely to give you some ideas and guidelines about your tax return. I'm just quickly going to cover, if you're a commission agent working for purely commission or a portion of commission, you might potentially be able to claim expenses from your commission. Very important. If your commission must be more than 50% of your total income. So that's the biggest thing that you need to look for. If your commission must be the biggest portion of your total cost to company from your employer. And that's very easy to calculate. You would see on your IP5 there's a 3698. 3699. Take your commission on your IP5 and just obviously work into the total of that, so 3698 and 99, and you will be able to see if you can actually claim expenses. The expenses that you can claim depends on the trade that you are in. Again, vehicle expenses, we're going to go through a whole lot of expenses in the next section, but expenses that you can claim must be for you to produce income or turnover for your employer. If you have if you're in a trade that you specifically need the membership for that trade, and for you to be able to represent the company, you will be able to claim that, and all the other expenses I will start explaining in the following section. Okay. Right, so the next section is all about what expenses you can claim, and this is not purely just, like I said, for commission earners. If you have a business that is a sole proprietor, so you Jasper Basson trading as Dryk Holdings, trading purely in your personal name, then obviously these expenses or these the net profit and net loss would be calculated in your personal income tax return. Right, so most people having businesses, you need to entertain. Entertainment would be coffee shops, it would be restaurants, any place, even coffee that you buy for your office or for your home office to entertain your clients when they come in. You can claim. Very important. SARS rarely do request this, but they can request the list of the expenses, but more specifically the list of the clients matched to that expenses who you actually entertained, and you need to prove. So it's similar to a logbook for a travel allowance. You need to be able to show SARS what clients did I actually entertain. Obviously to make sure it's not for private use. Right, so the first one would be entertainment. Right, the next expense, telephone expense. It will include telecom like a landline. It will include any kind of cell phone. What I normally suggest to our clients is, most clients is about 5%, maybe 10%, but roughly 5% of your calls and your usage of your phone would potentially be private use. So when you do your tax return, rather be safe than sorry, and from the start show SARS, here is my private portion of my telephone expenses, and just add that back on your tax return or on your financial statements when you do the financial statements. Right, but I was going to write down for your telephone here. Right, let me get back to your vehicle expenses. Vehicle expenses is more or less the same idea when you have a travel allowance. Only difference here, I'm aiming to look at all the various expenses that I can claim. Again, You need to keep a logbook. You need to keep it very accurate according to every little trip that you do, every little business trip that you do. You need to keep log of that. But here's a list of expenses that you can actually claim on your vehicle expenses, and your business portion, your business kilometers to your total kilometers for the year, that portion you will be able to claim. So the first one would be fuel and oil or fuel. So petrol or diesel, total amount. Try to keep the slips, or if you have a garage card, use the garage card. The next would be insurance on the vehicle. So insurance that you on a monthly basis, the short-term insurance that you pay on the vehicle. Your license fees on an annual basis. Your repairs and maintenance that you might have on your vehicle. Then obviously, if you do have a high purchase, if you're still in debt, the finance charge portion of your repayment. So it's not the full repayment, the finance charges on that repayment, and that whatever bank you are with will be able to provide you with a tax certificate for the interest portion on that high purchase. And then lastly, depreciation. The most vehicles you can claim over a 5-year period. You can claim so basically 20% per annum that you can claim on the cost price of the vehicle. Just very importantly to note, if you do write it off for, let's call it 3 years, and you do sell it then, and the selling price is more than the book value at that stage after 3 years, you will have a recoupment of the depreciation, but again potentially have a new vehicle that you will again be able to claim the depreciation on. That's something to keep in mind. Right, so you would basically list all these various expenses in your financial statements, and then the total of this you will add, work according to your travel allowance portion, the business to the total amount. Very important again, make sure you have all the proof ready before you submit it to SARS. And I do say it a lot, but it's very important, especially in the new year, to really keep your records and make sure you have the supporting docs ready, as if you're gonna have an audit in any case. Right. The next expense would be your office expense. So you either would have office that you rent, a commercial rent that you would pay for office space in an office park or something, or you can potentially claim a portion of your house if you're home-based worker. We have a lot of clients that's in network marketing. They work primarily from home, and coffee shops and restaurants. You can claim a portion of that, right? So the expenses that you can potentially claim on a home-based office, so it will potentially be a portion of the home that you're living in, a portion of that square meters you can claim. Right, so the expenses would be either you would rent a property, or you would own a property. If you own a property, you need to use the finance charges. Again, it's not the total payment of the bond, it's only the interest portion on that bond, and again the bank would be able to provide you with either a statement of the account for total of the year, or they would be able to give you a tax certificate for the interest portion paid on that bond for the year. Okay, but it's either interest or finance charges, the better word, or rent. So that would be your first expense that you're again going to list as a total to the calculation. The next thing would be if you're living in a complex, you would potentially pay levies. So your levies you would be able to give that. If you have a cleaner in your office or at home, that portion, square meters, the cleaner need to still clean your office, and that portion you can also claim. Insurance. Insurance, obviously of your building structure, and rates and taxes. Almost forgot the rates and taxes. So you will calculate all these various expenses, the totals of everything, and then you need to do a calculation. You need to look at what square meters I exclusively use for business. So you can't say I'm using my living room for part business and part private. You need to be exclusively for business. So it would mostly be your study, or a lot of clients don't have a study, but they have one room that they allocate in their home or in their flat as their study, and that would be your square. Let's call it 20 square meters. And you need to look at your total square meters. Let's call that 100. So pro rata 20 to 100 would be 20% of all the expenses of this total that you would be able to claim. Again, please make sure that you work according to all the portions that is exclusively for business use. Especially if it's a big, like this, big percentage of the total, make sure you can prove to SARS that it's used exclusively just for business. Right, just before I go on, there's some more expenses I'm going to talk to you guys about. If there's anything that you think about, questions that you have, please comment on below. I won't maybe see it now and answer it right now, but I will definitely get back to you, or it's maybe a topic for next webinar. The idea is to have a few series of webinars. Keep it free, just add value. That's all we want to do. So if you have any questions, any ideas of what you might think, what potential topics that you think would be interested to you, please comment below, and we will be glad to look into it, and maybe the next one would be your topic. Right, the next one will be obviously cost of sales. Cost of sales is a very easy, if you're into sales, you would potentially have purchases. If you're a builder, you will have purchases from Brights or Builders Warehouse or Timber City or whatever the case may be. Those expenses you'll be able to claim. Keep your invoices, keep your proof of payments, and if you're into a trading business where you have retail, also at the end of February, please take your stock. Keep proper records of your inventory. Inventory would be stock on hand, but it also would be work in process. So if you are again a builder, keep the record of potential stock that you bought that's still raw, and then also you have the portion where we already started using that stock or that items in one of your projects, and that would be work in progress. So half of a portion of a house that you're still busy building, that would be your work in process. So your inventory would have two parts: the stock part, that's actual stock on hand, and your work in process, that might be the more difficult one for you to calculate, but that is the other part of your closing stock. But obviously I don't have time today to go through the whole calculation and explanation of what everything that needs to be into stock. Please message me, inbox me, and we can look into that if you don't know. Right, then just the last, I think it's about the last expense that I want to cover. Obviously there's a lot of expenses, I can't cover everything now. You have small expenses like bank charges, printing and stationery, all kinds of small items, business cards that you print, all those kind of expenses that you can still claim, that I'm not gonna tackle right now. The last thing I just want to run through you is advertising. It's very important when you do provide someone with funds, in whatever way it may be. If it's advertising, if you want to claim it as advertising, you need to be able to show SARS that you actually received either brand recognition for it, or you put the banner on a website and you received recognition on that way. Any way that you provide funds to somebody in the sense of advertising, you need to be able to prove to SARS that you actually received something in return as value. It might be a good example might be a rugby team that you sponsor, the rugby jerseys. If you do sponsor rugby jerseys, make sure that your logo is on the rugby jersey or somewhere to see near the rugby field, obviously, it needs to be money exchange for exposure received. So that sums up my expenses portion of everything. I've got 2 topics left. One is when you do receive rental income in your personal capacity. Again, everything is just based today on personal income tax. And also if you receive a salary and a supplementing secondary income, how it need to be calculated. Okay, so I'm just going to quickly run through rental income. It's also something that SARS really looked at and focused on in the last year. From the beginning of this year, we received a lot of queries and a lot of audits specifically related to rental income. And potentially, let's just write the whole income expenses side out, but you will potentially have a rent received on the top, and you will have various expenses. And expenses again would be interest on the bond. You will have levies. You will have rates and taxes. You might have cleaners that you potentially need to let the flat or house being cleaned now and again. And you will have repairs and maintenance again. Repairs and maintenance, very importantly, it's purely maintenance. It's not improvements. So if you have any improvements, that improvements would be capitalized together with the cost price of the original cost price of the property. Somewhere in the line when you do sell the property, that will form part of your calculation for capital gains tax. Right, but all these various expenses you can claim, and then you would have a net profit or a net loss, whatever the case may be. Very important, SARS look at your interest paid, the finance charges, and that would be, your proof would be your bond statement, either a summary that the bank would send you for the whole year, or it can be a full statement for the year from March to February with all the various transactions. Whatever you receive from a bank or whatever you like to use as for a method of calculation, the answer would be the same. So, but interest paid, finance charges, make sure you have the bond ready, make sure you send that to SARS immediately when they do audit you. And the next one is your rental income. Make sure you have a lease agreement on file always. Don't have somebody that rent with you and you don't have a lease agreement. That's the first thing SARS would request from you, to make sure that you have a valid lease agreement. And also, if you use a letting agent, use that as proof that you well, most certainly do rent out at market-related value. So yeah, just to sum it up, make sure interest paid, have your bond statements ready, and rent received, make sure you have your lease agreement ready. Two important things, and if SARS audit you will receive about this 2 pages questionnaire about the property, a detail about the property, if it's connected persons that you rent to, and all kinds of various questions that they would need to attend to. Do attend to it very, very quickly. If you, I found that, and I had situations where SARS in about 7 to 8 days written back the expenses and just left with the taxpayer with the rental income but no expenses, and from there you need to try to do an ADR, which basically is an objection, a notice of objection that you to bring back the expenses onto your tax assessment. Right, and then lastly, I just want to quickly show you guys, typically, how your tax return or your financial statements together with your tax return will look like when you do a salary and you have a part-time business as well on the side. We do, like I said, we do have a lot of network marketing clients that in the beginning do it part-time, and then eventually after a few months or a year or two, they start doing it full-time. So that portion that you do have a business part-time, so well, the calculation would look like this. So you will have your salary on this side, which would be, let's call it 100,000 rand, and you will have your pay as you earn paid on that. So basically your monthly tax accumulated to the year on your IP5. Let's just call it 10,000 just for the sake of the calculation. Then on the other hand, you will have your business with a net profit or a net loss. So you will have your turnover, obviously, there's all your various expenses, that some of them that we discuss right now. At the end of the day, you will have either a net profit or you will have a net loss that you need to add or subtract to your salary. Okay. For the most people, except if you are on the highest bracket, you can, and SARS can potentially want to ring fence that loss against your salary. You can, if you have, in the most businesses in the beginning, you potentially have a net loss. You can deduct that net loss, let's call the net loss 10,000 rand. Your income tax calculation will then just be based on the 90,000, so it would be your salary less your net loss for the year. On your income tax return, your assessment would be 90,000 rand, and because you pay tax on your IP5 based on the amount of 100,000 rand, you would potentially receive some refund from SARS, obviously together with all your retirement and annuity and medical aid and all those kinds of expenses, but you will have a refund to some extent on the amount that you paid too much income tax. But on the other hand, if you take away this bracket and you actually received a net profit for the year of 10,000 from your secondary or your part-time business, and the part-time business can be also your rental income, rental net profit or rental net loss, then you will have a net profit of 110,000 rand, and obviously you would have paid too little tax, and end of the year you would have additional assessment with additional tax. The same idea would be if you receive income from two different employers. What should happen if you have two different employers? The one employer would potentially either both need to deduct 25% tax for you, or the one might be your primarily income, and they just would deduct your normal tax at, let's call it again, 10,000 rand. When you have a secondary income, in the sense of a secondary potential employer or contract work that they will be tax deducted, you need to request from that second employer to deduct 25%. So then you would potentially have another 100,000 rand additional salary, but with the 25%, so it's 25,000 rand. That would be additional pay that you pay on a monthly basis in the total of, for a total of a year of 25,000. Then the tax will be again calculated on your total income of the two salaries that will be combined on your tax return. The pay you earn from one primary employer would be 10,000 rand, and the pay you earn from your secondary employer, because it's your second income, you deduct 25%, and you would have paid 25, so a total of 35%. You would most definitely pay too much tax, and that tax would be refunded to you annually on your income tax return. I would strongly suggest that. We had quite a few examples where someone do earn income from two or three different employers. Both are under the threshold of about 75,000 rand per annum. But if you do earn 75 times 3, you haven't paid tax at all through the year, but you're going to pay a lot of tax by the end of the year. So most of these people normally get a surprise and they phone me in fear because all of a sudden they have a very big tax bill and they can't understand why, because they've just worked for 3 people or 2 people and two employers, and they didn't even realize that they have a tax implication for them. Right, I just want to quickly run through my notes and see if there's anything that I've missed. I think that more or less sums up everything for today. The whole idea was to keep it as short as possible. Don't want to bore you with tax. Tax is not everybody's favorite subject, but I think it's very important to at least have a basic knowledge of what to look for when you do your income tax return, or at least, even if you're a tax consultant, do your financial statements and do your tax return. I think it's wise to at least have some sort of idea of what he's doing. When the moment you sit down with him, at least you can ask him some questions. I have a lot of clients that they when you do the financials, there's a lot of questions, and it's nice. I always appreciate when the clients do give me a lot of questions, because he wants to be in control of his tax affairs. He wants to be in control of his finances. So doesn't matter if you think it's let's call it a dumb question. Do ask your accountant the questions. There's never something as a dumb question. You can rather be safe than sorry, especially with, like I said, with all the various tax audits that you potentially will face going forward. It's definitely increased a bigger number of amount of audits, in a big percentage that audits increased. So be ready, keep your supporting docs, even if you're unsure of what you need to keep. I always tell the clients, rather be safe than sorry, rather keep all your slips. We can throw out slips that's not applicable to your tax, but keep your slips, and I'll see you guys very soon. Please comment on this Facebook Live if there's anything that you think that you might be interested in looking at going forward in certain tax topics. It would help me as well to give an idea of what to talk about to you next. We want to keep this free tax webinars going. We really want to add value, and I hope to see you guys soon again, potentially be in a month's time. Have a great evening. I'll speak to you soon. Bye bye.